GM. GM. Let me move my microphone closer. G fucking M. Alright, today is Thursday. It is the 3rd of May. No, it's not. It's the 2nd of May. It feels like May has been 3 years long already. We're only on the 2nd of May. And this is Daily Levels, GM. So let's look at the market. Look, I think the most important thing right now is to step out of the way of what's going on from a long perspective. I want to cover a bunch of data today: shorting, open interest, funding rates, basis, CME, and explain why none of it matters right now, but it's all important coming up. Because you could see like every retail fish on the planet, right? Let's say you had access to Binance dashboard and you could literally see that every fucking idiot dumb money retail was getting short. It still wouldn't matter if this is an unwinding of long leverage. And if this is not just long leverage, but spot, because we've seen the ETF flows really pick up. Now, a lot of people, if you remember, for the past week, I've been screaming saying, why is everybody ignoring the ETFs? They were all happy when the ETFs were positive. Now when they're negative, no one's talking about them. Suddenly, we got this big red day. Everyone, net flows on every single ETF. And 560 million total. That DeFi one has none, but that doesn't even count. That's not even a spot ETF. It's like a hybrid. And especially BlackRock now. So we've actually had our first ever outflow day on BlackRock. Now, is 500 million a lot in the grand scheme of things? Yes. People are like, oh, it's only 500 million. Like, what do you mean it's only 500 million? A few days ago, there were over 12 billion of net inflows. Now there's 11.2. There's a billion, right? That's a billion in the past week has flowed out, right? 500 plus 100 plus 200 plus 100 plus about 120. That's at least a billion, if not 1.1, in just a week. In just 5-6 trading sessions. That's a lot. You know, a billion out of the net flows, right? A billion out of the 12, that's almost 10%. And it probably is 10% because it was about 1.2 billion that's flowed out. So in 6 days, 10% of all the net inflows have been offset, removed, flowed out. There is absolutely no way to dress that up as bullish. So finally, people are going to have to, acknowledge the fact that the ETFs are a net negative at the moment. They are going to cause the opposite of what they caused on the way up if this continues. So just look at it and keep it very simple. When we had all the positive flows from end of January, and we had hundreds of millions flowing in every day into February, and hundreds of millions all the way up to the peak where we had 1.5 billion in 2 days, billion here, half a billion here, and 2.1 billion in 3 days. The next day we had 600 million at the very top of the market. So if those high and sustained inflows were able to push us all the way to these highs through this run, and don't forget, crypto is inherently a long biased market. So you didn't just have those inflows, you had all of us going long too. You had people buying spot Bitcoin, you had people getting long on perps, you had people buying options, call options, you had everything. Everyone was fucking balls long. Of course they were. And so the cumulative buying, this is why Bitcoin is so reflexive, and this is why reflexivity goes both ways. The cumulative buying on the way up was one directional, right? Everyone was buying, nobody was really selling, people were afraid to short, until we reached the point where people are willing to sell. And you saw this very clearly when we hit all-time high and had that first sell-off. You started to see old coins move. You obviously had Grayscale selling, right? GBTC. But it was easy to ignore the Grayscale selling. Not ignore it, but it was easy to offset it, right? Throughout January and February, when it was just all red numbers for Grayscale, but always green for the rest. Right? So we had just positive flows every day, no matter what, even with Grayscale selling. But now, not only is Grayscale selling, but so is everyone else to different degrees. And it's not, like, if anything, the move down should be faster than the move up, because there's a lack, a big lack of demand, because there's no ETF, like, and this is just hypothetical, I'm not saying the ETF flows, we don't know what they're going to be tomorrow, we only know what they've been yesterday, and so we're going based off of the trend, and the trend of ETFs currently is outflows. I mean, that's fucking obvious. But on the way up, you had the ETFs buying, you had everyone else getting long. Now you have the ETFs selling, but everyone else is still long, and they have to sell too. The downside can come actually much quicker than the upside if it starts to capitulate. Because you've all these people who got long, not just Bitcoin, but altcoins on leverage, or they're long even on the CME. This is not just a dumb money thing either. Like the CME futures open interest peaked at 11.5 billion. It's coming down now to about 7.8, but it's still well higher than it was in January, right? At those lows, it was 4.2. It's still almost double of that. There's still a build-up of open interest. There's still a build-up of positioning of longs. It's still a bull market. People are still trying to hold on to their longs. People will hold on to these longs as long as they can. If experience has taught me anything, they will not close. People will not close these longs. They will not close them until they're forced to close. They'll wait until the last possible moment. They don't want to give up. Because that's how the market works. Right? It's, no one is ever going to turn around and say, I should close this position. They'll come out with some cope. It's a bull market. It just needs to go here. It just needs to go there. It's just one more push, whatever. It's okay as long as we're above 56. It's okay as long as we're above 54. It's okay as long as we're above 52, whatever. The reason why price goes down like that in a reflexive manner is because people don't want to close their positions. So it goes and hunts them. And until people get truly shaken out, we probably won't bottom. So the point of that was to set up this, because when you see price unwinding like this, and you have two red days in a row, and you break multiple key levels, right? And we're now below that pivot level, which I had marked from way back. If you remember on the way up, this was one of the levels I was watching. Below that, if you remember, 48, which acted as a nice pivot here, and 40.8, which acted as one there. They were the three main levels I was watching on the way up once we broke out above 40. We're below that. We closed below it yesterday, and we retested it this morning, and we're below that. So that's, if we are below 60, that's like the last place that I would see strength from the past chart. And it's fine as long as we're above yesterday's low, right? Because this is how the liquidations work. But if yesterday's low breaks, and it doesn't exactly look like a strong low, right? That yesterday's candle doesn't exactly look strong. Doesn't exactly look like a bottom. If that breaks, that's when you see the next wave of unwinding and liquidations. And my point is, most people try to say, oh, well, it should bounce now because it's down too much. But the whole point of a proper liquidation cascade is that it doesn't give any bounces. Just like on the way up, You're here, you're like, oh, it should pull back soon. It should pull back. It should pull back, right? It should, and it doesn't pull back. It should pull back. 3 big green days. 1, 2. Well, it must pull back now. No, 3 big green day before it stops. We've only had 2 red days on this push, and we've broken a key level. Today is actually the day where it's most likely to go lower and really break down heavily. Now, that doesn't mean it will. And if it doesn't break down today, that's a good sign in one sense. Because when you see these, cascading type of moves, the third day is generally the biggest. 1, 2, 3 on the big red day. Right over here. 1, 2, 3. Then it started to slow down. You can see from the collapse of FTX, 1, 2, 3. This one actually had 4 then, because obviously FTX was such a big bearish event. Then you see other areas where we're breaking key levels. 1, 2, 3, 4, 5, 6 red days in a row. Now these are bear market, probably slightly different, but in reality, not really. Once the structure broke here, this one actually held. So once it broke, you had 1, 2, and you had a 3. You had a big sell-off, like a big liquidation cascade, which we just haven't had yet. Now, we might not get it, but again, I think we will. And even here, like 1, 2,